Welcome back. Still with me via Zoom, Ricus Traders, PSG Hole-in-One, Ruimsig, Gary Booysen from Rand Swiss. Ricus, I'm going to ask you, I don't know what the answer is. There's going to be a Coca-Cola listing on the JSE. It got pulled, was it last year or the year before? Have you got any insight as to when or if it is still coming, or is it just faded away and we wait for an announcement one day?
No specific insight on that, unfortunately.
Gary, any insight from you? Because I remember all the excitement, and then it just faded. I don't know if anything else has happened.
No, I haven't. It wouldn't be. I can't remember if it was Coca-Cola or Coca-Cola bottling.
It was bottling.
Yeah, bottling. But I also haven't heard anything specifically. Nothing's crossed my radar on that.
Question came through around MTN. We had the Tercel court case, which I had forgotten about. It's from 2013. They lost. They will take it an appeal to the Constitutional Court. We're also seeing some of I think Nigeria was out earlier today. Gary, MTN, question is, charts looking not too bad. Is there opportunity here in MTN? Would you be looking at MTN as a telco, perhaps one of the others? Perhaps, I know you've liked Telkom in the past, but MTN specifically.
Well, MTN is actually the one that we hold in portfolios at the moment, and we have for a long time. And there's a lot that goes into MTN. So we obviously had Nigerian earnings out today. That accounts for about a quarter of the business, and the growth has been pretty solid. I mean, yes, they got hit with obviously the weakening of the naira, but I look at MTN. Yes, it can be argued that it's a utility, but I mean, we're looking for kind of 10.5 rand earnings next year. That puts it on a forward P of like 11.5. I mean, you're buying quite a business for 11.5 times earnings when you're considering that you could potentially be buying CMH, or at least we buy cars at 17.
Yeah.
I mean, this is a business that has 290 million subscribers across the African continent. They're growing in Nigeria now, despite the issues, and it does seem like Nigeria is settling down a little bit. It's one of the areas that still does have very positive demographic trends. I mean, you're talking about 240 million people just in Nigeria, of which MTN has only captured about 84 million. So there's definitely, I believe, still a growth story behind it. But at the same time, even if you do say that MTN is a utility, that wait a minute, this is X growth, it can't grow anymore, it's going to face all the pressures of a utility. Remember that utilities are utilities because they are such successful businesses that they need to be regulated. And typically they're very non-cyclical, they have very stable and predictable cash flows, they can pass through their costs onto consumers, they're entrenched in the economy, they have high barriers to entry. All of this is true of MTN. And that's a great business. What you have to contend with is, yes, there's going to be higher regulation from Nigerian regulators and South African regulators, and maybe they won't get the prices through that they want. But at 11.5 times earnings, it seems like something I have to hold. And if you look at that chart, I mean, we've obviously had that spike. It does seem like the downtrend is finished and there's a new uptrend in place. So 123, I would be buying this.
Ricus, MTN 123, as Gary says, nice looking chart as well.
It is. But I'm looking at about 185, if I'm not mistaken, as a potential price target on that. If not, I think as Gary said, lots of things that normally goes together with MTN. Part of that is obviously governmental risk. We've seen what Nigeria has done in the past. So it is, I think, of the 4 locals, possibly, what should I say, get used to volatility in their share price. But it's got huge potential. It's not something, I'm probably a little bit too conservative to just hold that in my portfolio. I prefer probably Telkom, Vodacom, but if you can stand the risk, it looks great technically. Nigeria garnered very good results for the quarter, and that's going to flow through towards sentiment on it.
Yeah, and of course the naira collapse is now behind them. That's now out of the way, and it was a disaster. But I suppose it resets in a sense. Ricus, let's stay with you. Question was coming through around local clothing retailers. We've got a bunch. We've got some high end. We've got some low end. We've got a South African consumer that's under pressure. And I suppose in a sense, clothing is slightly discretionary, although within reason. Would you be looking at any of the clothing retailers on the JSE?
Yeah, they've had a bit of recovery over the past number of days. My preferred holding there is still Pepcore, because of where it's focused on the market, because of its entry into the financial side of things, whether it be insurance or renting out cell phones. So I'd be quite happy to pick that up at these prices. As far as the others are concerned, beware of where your supply chain is coming from. That's the first risk associated if you take a look at the others. And I'm not talking about Woolies because I think that's something on its side. But yeah, they're not cheap at these levels, but low interest rates going forward, inflation under control, no VAT. I think it's been a bit of a positive spin on that sector.
Yeah, and another, I think what 21 May is budget take 3. Gary, try that again. Local clothing retailers. Any of them interest to yourself?
Yeah, so we hold Mr. Price, but I like all, excluding Woolies, which I don't like. But yeah, Pepcore, Mr. Price, Foschini, all looking good. The Foschini group, I think, is interesting. Ricus made a really good point there. Watch for local manufacturing as well. Supply chains are going to be a challenge. And when Foschini bought Jet, they did take a strategic decision to move a lot of their manufacturing locally. I think about 75% of their goods are manufactured locally now as well. So it does, I suppose, provide you a little bit. Maybe you can sleep a little bit better at night while Trump is throwing tariffs around the world and changing the way that the world operates. Not that I think that we'll be importing Foschini clothes or Mr. Price clothes from the US. I think we'll have a strong partner in China. Who will be looking to unload clothes to us for fairly cheap because they won't have a US market anymore. But of all of them, looking at, Mr. Price, as Rick is saying, all of them are recovering nicely. So you've had kind of that correction. I think the multiples have come down to far more reasonable levels. And I think you could easily see a recovery from here on any of them. But at the moment, our preferred is Mr. Price, strong cash generation. It's been in our portfolios for a long time. We don't typically churn around the stocks. So, I'm still a happy holder of Mr. Price. And I think one more point that I'll make is something you said as you opened. South African consumer is under pressure. We all say that. We all say, because we could always be under less pressure. But the fact is, the South African consumer is actually in slightly better shape than they have been in a while. Yeah. And part of that is because of multi-year wage agreements, across the mining and government sector that have actually allowed real wages, so inflation-adjusted wages, to increase, significantly, and that's putting money in people's pockets. We also, as Ricus mentioned, that okay, it's 0.5%, but we'll take it. At least it's not going through. And I think we've got a fairly benign view of interest rates going forward. I think, and I'm not saying peak cycle or anything like that. And yes, there's a lot of uncertainty that could result in a tighter monetary regime across the globe. But at this stage, I mean, the Fed is still looking at cutting interest rates. In our view, base case, probably 325 basis point cuts, maybe 4. It's kind of equal chances there. And the South African Reserve Bank has been incredibly constrained. I think there's definitely room for the SARB to give us a cut as well. All of which will feed straight into these companies' pockets. Yeah. So I like them all.
Yeah, and 2.7 was our lost inflation number. We've got a SARB meeting late May and FOMC, I think, early May. Gary, Glencore question coming. Glencore, a good copper investment?
It's a complex investment. It hasn't been a good copper investment up until now, but I do think it's a good copper investment. I mean, they did get hit in their copper business a little bit just from their production numbers have come down. Remember, Glencore is very different from the other large commodity players because it's also it's got that big marketing segment and it's very involved in kind of like the commodity supply chains, which I think it is probably maybe a little bit more exposed to the disruption that we've seen in global trade, which is maybe one of the reasons that we've seen it under a little bit of pressure. But I mean, they've also got obviously the big coal business. Lower oil prices are not helping as energy prices come down as well, and there's the expectation of lower demand. But it's a cyclical company. It's very different from MTN that we were talking about in that when when commodity prices start heading up, Glencore is going to have a leveraged move to that. And we've just seen commodity prices under a little bit of pressure, specifically in their stables. So, Dr. Copper is a gauge of the health of the global economy. And the global economy, people are a little bit worried about that. So if you're prepared to take a contrarian view and buy into the fear, I think Glencore is probably a reasonable prospect longer term. A very well-managed Swiss company.
Yeah, okay, but we haven't got time, Ricus, for you. We'll get your views on Glencore next. Let's go to stock picks. Ricus, resilient properties.
No, we're talking about maybe a more benign interest rate environment for South Africa. Obviously, local property will benefit, and if you take a look at global property, that's also, well, it's held up well to start off with. And sectorially, globally and locally, that sector is an uptrend. Resilient, basically because I've got it in my portfolio. The office sector is still not quite firing on all cylinders, but you are sitting with a historic around about 8% div yield. You've probably just on my technical basis, and also just taking a look at price to FFO, probably about a 10% possible capital gain on that. So you're looking at about 15-18% return, which I think is not something to be frowned at in markets as volatile as this. So it's a bit of a safety measure, a bit of annuity income, and a bit of capital gain. I don't think one can ask for a lot more in our current global market.
Yeah, got you on that. Gary, Alphabet, and I just had a look. PE's below 20. I don't know when last I saw that. We will pick today's Alphabet. Results were out last week. I thought they were really excellent, pretty much all round.
Spectacular results. I mean, the stock was up like 5% after hours, and it is absolutely incredible how cheap this business is at the moment. So also, if you look on a forward PE, assuming probably like maybe like a 18-19% earnings growth, you're talking about like 16 and a half 1 year forward PE for Google. This is kind of what we're assuming we buy cars is valued at, and we can have Google for the same price, or at least Alphabet. So looking at the results, I mean, really spectacular. I mean, one of the things that we were also talking about the Mag 7 stocks earlier is that one of the big growth drivers for them is their cloud business as well, and that is actually supply constrained at the moment. They have more customers than they can currently supply services to. They need to build more data centers at this stage. That is a fantastic problem to have. We're not scratching our heads wondering how they're going to get market share. We know that they will have customers coming. Looking at it, obviously they still significant, probably roughly half their revenue is coming from search advertising, and I think they've been a little bit nervous to cannibalize that by rolling out Gemini in force.
Yeah.
Obviously the AI app, and they have been losing some ground to OpenAI as people move across and use ChatGPT to answer their questions rather than going and using the old Google search bar. But they have the ability, and I think they need to put that Gemini module front and center already. When you get a search, you kind of Gemini first answers the question, but there's a lot of areas that they need to kind of make that more default app. So I think that is coming. And then of course you've got the moonshots as well, and the moonshots are now being reported on. So you have something like Waymo, which is their self-driving cars. Currently 250,000 rides per week across 4 US cities. This is a silent giant business that is coming, and it is going to change the way that the world moves around. It's going to change mobility. So, and whether it's going to be Waymo or it's going to be Tesla in conjunction with Uber, or how it finally plays out, it's going to be interesting to see. But at this stage, Google has a very, very solid product in Waymo, and I think we're looking forward to that as potentially accelerating growth of the company over time. And if you've got high growth expectations with only call it a like sub 20p at the moment, I think you've got to buy it. You've got to buy it.
And fun fact, I mean, YouTube is bigger than Netflix. Everyone loves Netflix, and there's little YouTube, and people are starting to watch YouTube more and more on TV rather than mobile devices. But that's all for Stockwatch today. Thanks to our guests, Ricus, PSG Hole in One, Ruimsig going with resilient properties, Gary Booysen, Rand Swiss going with Alphabet. Up next, the close. Stay watching.